everybody. This is Wayne, your local licensed insurance counselor. And this segment, I am talking about two parts of homeowners insurance. And other segments, I've talked about Part A, Part B, Part C, Part D. Today, it's time for Part E and Part F. Part E is the liability section, and Part F is a section called medical payments to others. And much like auto insurance has a liability section, home insurance has a liability section. So say, God forbid, somebody gets hurt at your home. Can't be you, can't be your relative or resident relative. So nobody who lives in the house. So this does not cover them. But any of your guests who are visiting your house, if they get hurt and and especially in cases where they don't have health insurance, then oftentimes those medical payments, whatever need is needed to take care of their injuries, can be paid for through the liability or section of your homeowner's insurance. Remember, liability is just a fancy word for lawsuits. And I still remember years ago there was this article that went around the news sources that said, labeled this poor lady the worst aunt in America. And it was this story that made her look just so vicious and mean because she, quote, sued her nephew. Well, in point of fact, she was visiting with her nephew. She happened to be unemployed at the time and she was hanging with him. And she slipped and fell in his house, fractured her wrists, and she needed major surgeries to get the use of her wrist back again. And the only way that she could afford to pay for those was to file a claim through her nephew's homeowner's liability coverage. So it wasn't a lawsuit the way we think of a lawsuit, where there's this adversarial situation in court with lawyers and stuff who are arguing in front of a jury. Not that kind of a thing in this case, but these are the kinds of claims that will come up against a homeowner's liability coverage. So just like with your auto, it's important that whatever liquid assets that you may have at risk, remember in Michigan that's 25% of your income multiplied by however many years till you'll have that income. So that plus liquid money, investments, CDs, savings, any kind of usable funds, you want to pool all that together, total it up, and whatever that amount is, in order to shield it, you want to put at least that much on your insurance in the liability section, both auto and home. So what about this medical payments to others, Part F? That is typically a very small dollar amount. Some policies have as little as $1,000, some max out at $5,000. And that might not seem like enough for medical payments, especially if you think about the story I just told you about the, quote, worst aunt in America. But the medical payment for others, or Section F part, is for emergency and immediate care. So in the case of a story like the aunt, the medical payments to others portion of her nephew's homeowner's insurance would have paid for the immediate emergency response and an ambulance ride to the hospital. Once somebody's admitted to the hospital, if there's going to be a claim against the homeowner's liability, then that larger liability pool of money could become available. So as always, if you've got questions, leave message or questions in the comments on this video, or you can reach out to me. I am Wayne Haney, the local licensed insurance counselor in these parts at Haney Farm Bureau. We're in downtown Lake Orion, snuggling between Johnny Black's and Sagebrush. So feel free to reach out. Very happy to advise. Please be safe.